All right, strap in, everyone, because today we are going deep on a wild story.
It's a story that seems like it should be
Yeah.
straight out of a financial thriller.
It really does.
The 1992 Indian stock market scam,
Yeah.
orchestrated by Harshad Mehta.
Harshad Mehta.
We've got a ton of research on this.
We've got a lot of stuff to go over.
Our mission here
Yeah.
is to understand how this thing happened,
How it happened.
the impact it had, and the reforms it triggered.
This is a big one.
So get ready for some wild details.
Oh, yeah. Buckle up.
We're talking about forged bank receipts,
Forged bank receipts.
loopholes in the system,
Yeah.
and a whole lot of money.
Oh, yeah.
We're talking about 5,000 crores.
5,000 crores.
Which back then.
Which, to put that in perspective, was
Yeah.
bigger than some countries' entire economies.
Absolutely.
Yeah.
And we'll see how stocks like ACC went from 209,000 euros in
Yeah.
a matter of just a few months.
That's insane.
Yeah.
So let's set the stage here. Early 1990s, Indian stock market.
Pretty young, still developing.
Yeah, things were a little,
The rules weren't quite as tight as they are today.
let's just say that. Yeah.
For example, back then, banks couldn't directly invest in the stock market,
Right.
but they had to keep a certain percentage of their assets in government bonds.
Government bonds.
And that's where Mehta saw a crack in the system.
Oh, okay.
Banks needed to buy and sell these bonds
Right.
to meet these requirements.
To meet those requirements.
And they had to go through brokers to do it.
I see.
Mehta, being a prominent stockbroker,
Great.
he swoops in with this enticing offer.
Ooh, enticing offer.
Higher interest rates for banks that transferred funds to his account.
To his personal account.
To his account, yeah.
Red flag.
And he promised to handle the bond buying on their behalf.
Okay, if I was a bank manager,
Right.
that would set off all kinds of alarms for me.
Yeah, you'd think so, right? But Mehta, he had this reputation as a successful trader, so there was this level of trust,
Okay, so there was some trust there.
at least initially,
Right?
and his operations did seem legitimate at first.
Oh, so it wasn't like
No, not right away.
a blatant...
It added to the illusion.
Oh, okay.
But behind the scenes, he was crafting this web of deception.
This is where it gets interesting.
Yeah, this is where it gets juicy.
So he's got this pool of money from the banks.
Right.
And he starts
He starts pumping it into the stock market.
pumping it into the market.
Strategically buying up certain stocks,
Okay.
driving those prices way up.
Like artificially inflating them.
Exactly.
Creating that demand.
Creating that demand.
So it's like, think of a popular toy that everybody wants.
All right.
The price skyrockets because it seems scarce.
Exactly.
Like it's super valuable.
Yeah.
That's basically what he did with stocks.
Exactly.
Wild.
Yeah.
So then he sells those inflated stocks
For a huge profit,
for big profit. Yeah.
leaving unsuspecting investors.
Holding the bag.
Yeah, holding the bag.
When the bubble bursts,
Inevitably.
it's got to burst at some point.
Right.
And one of the most dramatic examples,
Yeah.
we have ACC, a well-established cement company.
Right.
1991, their shares were trading at around 200.
Right around there, yeah.
Fast forward just 3 months,
Just 3 months.
the price shot up to 9,000
9,000.
because of his manipulation.
Thanks to Mehta.
That's a jump of over 4,000%.
It's insane.
Absolutely insane.
It was a wild ride.
It was a wild ride.
People got drawn in.
Oh, yeah. Everybody wanted a piece of that.
Everybody wanted in.
Fueling that frenzy.
Yeah, fueling that frenzy.
But they didn't realize
They didn't realize what they were standing on.
They didn't realize that the foundation was
It was shaky.
shaky, yeah.
The whole scheme was built on deception,
Deception.
lies.
And Mehta wasn't done yet.
Oh no, he had more tricks.
He had another trick up his sleeve.
Yeah.
He was using bank receipts,
Bank receipts.
or BRs, as they're called,
Yeah, that's the shorthand.
for ready-forward deals.
Yeah.
Common practice in the bond market.
At the time.
So for those who aren't familiar,
Right.
a ready-forward deal,
Yeah.
it's basically a way to buy and sell bonds
Yeah.
without actually moving them physically.
It's all on paper.
Okay, on paper.
The BR served as kind of an IOU.
An IOU.
A promise of future delivery.
Okay.
So it was like this game of hot potato.
Like potato.
Passing these IOUs around with the expectation
That they are
that they represented real bonds.
actual bonds.
Yeah.
Okay.
But Mehta saw an opening here.
Oh, boy.
He started creating forged BRs,
Forged.
essentially worthless pieces of paper.
Worthless pieces of paper.
And he was using them
To
to secure loans from banks.
So he's getting loans based on fake receipts.
Pretty much, yeah.
That's so audacious.
It was a bold move.
It was a bold move.
And it worked.
It worked
For a while.
for a while.
Smaller banks.
Smaller banks.
Maybe blinded by the potential profits.
Those quick profits.
Yeah, those quick profits.
Yeah.
They kind of overlooked the discrepancies.
They missed those red flags.
They missed those red flags.
They were issuing these BRs to Mehta.
They were, yeah. And that gave him even more fuel.
More fuel.
To manipulate the market.
To manipulate the market even more.
To pump more air into that bubble.
Oh, man, it's like building a house of cards.
Yeah.
On top of a teetering tower of blocks.
It's bound to collapse.
It's going to collapse eventually.
It's a matter of time.
It's just a matter of time.
And that's exactly what happened.
It had to happen.
April 1992.
April 1992.
The sheer volume of Mehta's investments in government securities started to raise some eyebrows.
It was too much.
It was too much.
To ignore.
Yeah, it couldn't be ignored.
So people started getting suspicious.
People started talking.
Talking, whispering.
Yeah.
Something shady's going on here.
Something's not right.
And then the panic sets in. That's when things...
Investors started to realize that they might be holding these inflated stocks.
Stocks with no real value?
Yeah.
And they start selling?
Frantically selling.
Oh, man. A classic market panic.
Driven by fear and uncertainty.
Fear and uncertainty. And the banks.
Oh, no, the banks.
They were left holding those worthless BRs.
Those worthless BRs.
We've been duped.
They had been completely duped.
It was chaos.
Chaos.
Stocks plummeting.
Fortunes evaporating.
Evaporating overnight.
He was devastated.
Not just for the investors.
No.
But for the entire Indian financial system.
The entire system took a hit.
The impact was huge.
Seismic.
Yeah.
The market crashed.
40% drop.
40%. Almost overnight.
Billions of rupees.
Billions.
Just gone.
Gone. Vanished.
Financial wreckage.
It wasn't just numbers on a screen, though.
No, this is about...
This is about people.
People's lives.
People's savings?
Yeah.
Their lives were intertwined with this market.
And this is where it gets really real.
Yeah, the human cost.
The chairman of Vijaya Bank.
Deeply affected by the bank's losses.
He took his own life.
It's a stark reminder that these financial scams...
They're not
abstract.
They're not just numbers.
They have real consequences.
Real consequences for real people.
They tear through lives.
Yeah.
They shake the very foundation of trust.
The trust in the system.
In the system.
So we've seen how this elaborate scheme played out.
Right.
But what about the aftermath?
Yeah, what happens next?
What happened to the banks?
What were the consequences?
Were there any consequences?
For those involved?
For the people who issued those forged BRs.
Right.
And most importantly, what was done to prevent this from happening again?
Those are the big questions.
That's what we'll delve into next.
We'll unpack all of that.
Stay with us as we continue this deep dive.
Into the 1992
Indian stock market scam.
We'll explore the lessons learned.
The lessons learned.
And the lasting impact.
The lasting impact.
On the Indian financial landscape.
Stay tuned. So we just left off talking about the devastating impact.
A lot of fallout.
The market crash, the financial losses.
Huge losses.
And of course, the tragic human cost of all of this.
It's a sad story.
Let's dig deeper into the specifics here.
Yeah, let's get into it.
What kind of losses are we actually talking about?
We're talking big numbers.
Give me some hard numbers.
The National Housing Bank.
Yeah.
They took a massive hit.
Yeah.
They lost 1,199.39 crores.
199.39 crores.
And remember...
This is back in the early 90s.
Early 90s.
So that amount today would be astronomically higher.
Oh, yeah, way higher.
It's hard to even fathom.
Hard to fathom.
What about those banks that were issuing those forged bank receipts?
Ah, yes, the BRs.
The BRs, were there any repercussions for them?
Absolutely.
Okay.
They faced intense scrutiny, penalties for their role in facilitating Mehta's scheme.
So they were held accountable?
To some degree, yes. It became very clear that many banks just didn't have adequate...
They didn't have the proper...
risk management practices.
They weren't doing their due diligence.
No, not at all.
They were handing out loans.
Based on flimsy documentation.
Blinded by those high returns.
Blinded by the promise of quick money.
It's a harsh lesson in due diligence.
It really is.
But you know, every cloud has a silver lining.
That's true.
This whole ordeal forced India to take a good hard look at its financial system.
Yeah.
And realize, okay, we need a serious upgrade here.
A major upgrade.
Can you tell us about the reforms that came out of this crisis?
Oh, absolutely.
Lay it on me.
The 1992 scam It exposed these vulnerabilities
And vulnerabilities that couldn't be ignored anymore.
that couldn't be ignored.
The government had to act.
They had to.
And one of the most significant outcomes of all of this was the birth of the National Stock Exchange.
ENSE.
The NSE. We hear that name all the time today.
It's a big deal.
So what made it so revolutionary? What was so special about the NSE?
Well, before the NSE came along,
Okay.
trading was primarily done on the floor of exchanges.
Okay, like a physical.
Yeah, very physical,
Paper-based.
paper-based, limited to just a few major cities.
I see.
But the NSE, it brought about a monumental shift
A monumental shift.
by introducing online trading in India.
That must have been a game changer.
It was huge.
Suddenly, anyone with a computer and internet access
Right.
could participate in the stock market.
Yeah, it opened up the market.
It made it more accessible,
More accessible.
more transparent.
More transparent, yeah.
Do you think that had a democratizing effect?
I think it did.
Yeah.
It brought in a much wider audience.
Yeah.
Of course, there were concerns
Oh, of course.
about whether this accessibility
Yeah.
would make the market more vulnerable.
To manipulation.
Exactly.
Yeah.
But the NSE also brought in these improved surveillance mechanisms
Okay.
and stricter regulations.
Okay, so they thought about that as well.
Yeah, they tried to address those concerns.
So it wasn't just about making the market more accessible.
Right.
It was also about building a more robust
And transparent system.
transparent, yeah,
More secure.
a better overall system.
Definitely.
What about the existing regulatory bodies?
Yeah, the watchdogs.
Did this scam lead to any changes in how the market was overseen?
Absolutely.
Okay.
All eyes turned to the Securities and Exchange Board of India.
SEBI,
SEBI.
Yes.
SEBI. They're essentially the watchdog, right?
the watchdog of the Indian stock market.
They're responsible for protecting investors,
Investor protection.
making sure everything's on the up and up.
Fair practices.
So SEBI was already in place before the scam.
They were.
So did the events of '92 reveal any shortcomings in its ability to regulate?
Well, yeah, the scam exposed some of SEBI's limitations at the time.
Okay.
They just didn't have the teeth.
They weren't strong enough
Not strong enough.
to prevent this kind of large-scale manipulation.
It was a big wake-up call.
So they needed more power.
More power, more resources to really keep an eye on this rapidly evolving market.
The market was changing quickly.
So how did SEBI transform after the scam?
It was a major overhaul.
Okay.
They were given more autonomy,
Okay, more independence.
more independence, more resources
Yeah.
to operate independently.
So they could really do their job
They could do their job, yeah.
properly.
And they received enhanced enforcement authority,
So they could actually penalize people.
impose stricter penalties
Yeah.
on those who violated the rules,
So a more independent, well-equipped,
empowered.
empowered SEBI.
Yeah.
Makes sense.
It was necessary.
But true market integrity needs to come from within as well.
You're absolutely right.
We can have all the regulations in the world,
It's not enough.
but if the companies themselves,
Aren't operating ethically?
it's still a problem.
It's a recipe for disaster.
So this scam prompted a wave of introspection
Some soul searching.
within corporate India.
Yeah, they had to look in the mirror.
It led to the development of the CII code for desirable corporate governance.
A very important code.
What is that exactly?
It was championed by industry leaders,
Okay.
and it aimed to raise the bar
Okay.
for ethical conduct and accountability.
So it wasn't just about policing from the outside.
Right.
It was about fostering a culture of ethical behavior within the companies themselves.
Exactly.
But change from within.
Yes, a shift in mindset.
So the focus shifted towards greater transparency.
Transparency in financial reporting.
Yeah.
Clearer guidelines for board responsibilities.
Okay, so more accountability.
More accountability
And an emphasis on ethical decision-making.
at all levels of the organization.
Top to bottom.
Top to bottom.
It sounds like the 1992 scam, as devastating as it was.
It was a huge blow.
Yeah,
But it served as a much-needed wake-up call
a wake-up call.
for India's financial system.
It forced a complete overhaul,
A reset.
leading to a more robust, transparent, and resilient market.
That's a great way to put it.
So the reforms that were implemented after the scam
Yeah.
weren't just about punishing the wrongdoers.
It was about more than that.
It was about building a system
A better system.
that prioritized investor protection
Investor protection first.
and market integrity above all else.
That was the goal.
But what about the mastermind behind it all?
Harshad Mehta.
What happened to Harshad Mehta after the scam came crashing down?
Well, that's a story for another time.
Did he face justice?
We'll delve into all of that next.
Stay with us as we continue our deep dive
Into the 1992 Indian stock market scam.
We'll explore the fate of Harshad Mehta.
And the lasting legacy of this incredible story.
Stay tuned. We've talked about the scam, the fallout from it.
The reform.
The reforms, yeah.
Yeah.
But we haven't really talked about the fate of the man at the center of it all.
The mastermind.
The mastermind, Harshad Mehta.
Right.
What happened to him after this whole thing?
After the scam unraveled,
Well,
his downfall was...
I bet it was pretty dramatic.
It was as dramatic as his rise, you know? He went from being the big bull
But the
of the stock market
Yeah.
to facing a whole bunch of charges.
Criminal and civil.
Criminal, civil, the whole works.
Wow.
He was arrested,
Arrested?
banned from trading,
Oh, wow.
and his reputation, well,
Carnished.
yeah, completely tarnished.
It's a classic tale of hubris.
It really is.
So, did he ever admit to any wrongdoing?
That's the thing.
Yeah.
Mehta, he always maintained this defiant stance.
Defiance.
Yeah, like he was just a
Savvy operator.
yeah, just a savvy operator.
Who was exploiting loopholes.
Exploiting loopholes.
He didn't break any laws.
That was his argument.
He just bent them.
Bent the rules.
To his advantage.
To his advantage.
So he never really
admitted guilt.
He never took responsibility for all the turmoil he caused.
No, not publicly.
For all the lives he affected.
He even went so far as to allege
Oh, this is interesting.
that he had paid a bribe.
A bribe. To who?
To the prime minister at the time.
Oh, wow.
To try to escape prosecution.
Which I can only imagine created a huge controversy.
It created a political firestorm.
So, a lack of accountability, even in the face of all this evidence.
It's a fascinating psychological puzzle.
Yeah, like what was driving him?
Was it pure ambition?
Was it greed?
Did he think he was too smart to get caught?
Or was he just completely disconnected from
Yeah, from the consequences of his actions.
the real world consequences?
It's hard to say for sure.
So he never
admitted guilt.
He never admitted guilt.
But he was convicted in some of the cases against him.
Okay, so he did face some justice.
He did.
Yeah.
And served time in prison.
He served time.
Yeah.
It's a reminder that systems can be flawed.
Oh, absolutely.
They can be in need of reform.
Definitely.
But individuals still have a moral responsibility for their actions.
you can't just hide behind loopholes.
No.
You have to be accountable
You have to take responsibility.
for your choices.
Made a story.
It's a cautionary tale.
It really is.
It reminds us of the dangers of unchecked ambition
Unchecked ambition.
and the importance of ethical conduct,
Especially in finance.
especially in finance where trust is so crucial.
Absolutely.
Yeah.
So as we wrap up this deep dive into the 1992 scam,
Right.
the question remains,
The big gush.
could something like this happen again?
In today's market,
We have better technology,
more sophisticated system.
stricter regulations.
Yeah, definitely.
We're more aware of these tactics.
We've learned from the past.
Are we really safe from another Harshad Mehta?
I wish I could say yes with absolute certainty.
Yeah.
But the truth is, no system is completely foolproof.
There's always a way,
There's always someone trying to find a way around the rules.
especially when greed is involved.
Greed is a powerful motivator.
So it's like this ongoing arms race.
Between those trying to game the system
Yeah.
and those trying to protect it.
And as technology evolves, so do the methods of manipulation.
It's a constant cat and mouse game.
So we can't afford to be complacent.
We have to stay vigilant.
So what can we learn from the 1992 scam
What are the key takeaways?
that can help us navigate today's financial landscape?
Well, I think the most important lesson is
Yeah,
we have to be constantly vigilant.
we can't let our guard down.
We have to be wary of unusual market movements,
Things that just don't seem right.
promises of extraordinary returns.
Those too good to be true situations.
Exactly. If something feels off, it probably is.
If it sounds too good to be true, it probably is.
That old adage holds true.
It does.
And we have to remember,
Yeah,
regulations are only part of the solution.
it's not just about the rules.
It's about ethical conduct.
Ethical conduct.
That's paramount.
We have to foster a culture of integrity.
Not just in finance,
Across all industries,
everywhere.
trust is hard to rebuild once it's broken.
It's a fragile thing.
It really is.
So it's not just about having the right rules in place,
But it's about creating a system,
where ethical behavior is the norm.
not the exception.
Right.
The 1992 scam is a potent reminder.
A reminder that ethical lapses, even by a few, can have a huge ripple effect.
They can damage the whole system.
Erode public trust, undermine the entire system.
So as we look back on this event,
This historical event,
Yeah.
it's not just about understanding what happened,
it's about learning from it.
extracting those valuable lessons
Yeah.
that can help us build a better future.
a more resilient financial future.
That's the goal.
So the 1992 scam, it may be a chapter in India's past,
But it's a chapter with valuable lessons.
lessons that we can apply today,
It reminds us to be vigilant, adaptable,
and committed to upholding those ethical standards.
in all our financial endeavors.
Absolutely.
Yeah.
And on that note, we're wrapping up our deep dive into the 1992 Indian stock market scam.
It's been a fascinating journey.
We hope you found this exploration insightful.
And maybe it sparked some thought-provoking questions.
Yeah. What are your takeaways?
The pursuit of knowledge is a continuous journey.
Stay curious, stay informed.
And as always,
Thank you for joining us.
on the deep dive.